Ekuya Donko has been growing cocoa on this 5-acre farm for more than 40 years. Every year after harvest, she sells the cocoa and invests part of the money obtained in government bonds with the hopes of making more profit. But she says things are no longer going the way she had planned.
I was told that government bonds are the safest for investing money and I would get a good return on my investment. But for the past 2 years, I have lost a lot of money on my investment.
2 years ago, Ghana started implementing both a domestic and external debt exchange program to tackle the country's ballooning debt and also help secure an IMF bailout. Investors like Ekuya, who had their money in government bonds, mutual funds and other collective investments, are suffering a haircut on their investments. Ghana's debt is currently more than 70% of the country's GDP. Local debt constitutes about 28%, while external debt accounts for 43%. Last month, the government said it had secured debt relief of about $2.8 billion from bilateral creditors under the G20 Common Framework. The relief is expected to provide Ghana with the much-needed fiscal space to implement reforms, stabilize the economy, and rebuild investor confidence. But some economists are concerned that Ghana's weakening currency could make things much more difficult for the government. The local currency, the cedi, has depreciated by nearly 4% against the US dollar since the beginning of this year.
50% plus of our debts are in foreign currency. So the depreciation of the cedi means that with each period, the value of our debts rise. The value of the cedis required to service the debt rises.
Analysts want the government to focus on boosting the country's cocoa earnings. They believe it could help in shoring up Ghana's foreign exchange reserves and also stabilize the local currency. Investors like Ekuya Donko want to ramp up production of the cash crop and hope it will help bring the country's economy back on track. Nabil Ahmed Rufai, CGTN, Accra, Ghana.